Welcome back to another episode of Unlocking the Upside, where we break down investment insights, market trends, and the tools that give analysts an edge. I'm Jeff Robinson, founder of theinvestmentanalyst.com, and with me, as always, is James, the man tasked with keeping my ramblings in check. Today, we're diving into one of the most overlooked yet powerful skills in modern investing: prompt engineering. Over the last 18 months, I've taken my AI interactions from simple 3-line requests to fully structured 5-page prompts. And let me tell you, it's a game changer. James, are you ready to see how AI can truly revolutionize investment analysis?
Absolutely, Jeff. AI is only as good as the questions we ask it. And today we'll break down how investment analysts can use prompt engineering to get deeper, more actionable insights. Let's get started.
Investment analysts who master prompt engineering see a 400% increase in research efficiency compared to traditional methods. Today, we're exploring how this emerging skill is completely transforming financial analysis.
That's quite a striking statistic, and it really highlights why this has become such a crucial differentiator in the industry.
You know what's fascinating? Just 18 months ago, most analysts were typing basic 3-line queries into AI tools. Now, the leading firms are developing proprietary prompt frameworks that span multiple pages and generate insights that would have taken weeks to compile manually.
But how do we know these more complex prompts actually deliver better results?
Well, let me share a real-world example. Recently, I compared 2 analysts researching Tesla's financials. The first used a basic prompt: analyze Tesla's financial statements. The second engineered a detailed framework that specified exact metrics, peer comparisons, and potential red flags in cash flow patterns.
And I'm guessing the difference in output quality was significant.
Oh, you know it. The sophisticated prompt uncovered patterns in Tesla's working capital that raised serious questions about their inventory management, something the basic prompt completely missed. It also identified 3 accounting red flags that weren't obvious from standard financial ratios.
That's exactly the kind of insight that could make or break an investment decision. What are some other key differences between basic and advanced prompts?
Well, think of it like this. A basic prompt is like asking someone, how's the weather? While an advanced prompt is like giving a meteorologist specific parameters to analyze atmospheric conditions, pressure systems, and historical patterns. The depth of analysis is just completely different.
So what makes a truly effective prompt framework?
You know, it's actually quite systematic. First, you need precise parameters, specific metrics, timeframes, and benchmarks. Then you layer in contextual elements like macroeconomic factors and industry trends. Finally, and this is crucial, you build in what I call verification triggers that force the AI to explain its reasoning and cite sources.
That reminds me of something interesting I've noticed. Many analysts seem to struggle with structuring these complex prompts effectively.
Exactly right. The most common mistake I see is what I call prompt tunnel vision. Analysts get so focused on specific metrics that they forget to include broader context, like analyzing a tech company's margins without considering the semiconductor shortage impact.
And I imagine there's also the risk of information overload.
That's where the art of prompt engineering really comes in. I use what I call the pyramid approach, starting with broad parameters and then drilling down into increasingly specific details. Each layer builds on the previous one, creating a coherent analytical framework. Okay, James, can you give me a minute? I want to let our listeners know we've got something new to highlight. I want to briefly talk about something every serious investment analyst needs: financial modeling mastery. Too often, modeling is treated as a technical exercise, but the best analysts know it's about strategic thinking just as much as numbers. That's why I wrote Financial Modeling Mastery for Investment Analysts, to bridge the gap between technical skills and real-world investment decision-making. Drawing from my experience as a former UBS managing director and 10-time #1 ranked analyst, this book goes beyond Excel formulas. It teaches you how to build models that truly capture the complexity of businesses, anticipate market shifts, and integrate qualitative insights with quantitative precision. Whether you're an investment banker, equity researcher, portfolio manager, or simply seeking to enhance your modeling skills, this book will revolutionize your approach to financial modeling. Get your copy now on Amazon, theinvestmentanalyst.com, or wherever you buy books. And now back to the show.
Let's talk about verification. How do you ensure the AI's outputs are reliable?
This is crucial. I actually build a 3-step verification process into every prompt. First, require the AI to cite specific sources for any numerical data. Second, include instructions to test logical consistency. And third, force the AI to identify potential biases or assumptions in its analysis.
That's quite sophisticated. What advice would you give to analysts just starting to develop these skills?
Start with what I call the building block approach. Begin with simple, well-structured prompts focused on specific metrics. Once you're comfortable with those results, gradually add layers of complexity. It's like learning to write code. You start with basic functions before building complex programs.
Speaking of complexity, how do you see this skill evolving as AI technology advances?
Well, we're already seeing the emergence of specialized prompt frameworks for different types of analysis. Some firms are developing proprietary frameworks for forensic accounting, others for market sentiment analysis. I expect we'll soon see prompt engineering become as specialized as other areas of financial analysis.
That's fascinating. So it's not just about mastering the technology, it's about applying it to specific analytical challenges.
Exactly. And here's what's really exciting. The analysts who master this skill now aren't just improving their current work, they're positioning themselves for the next wave of AI advancement. Every iteration of these tools becomes more powerful when guided by well-engineered prompts.
So what's your prediction for how this changes the investment analysis profession over the next few years?
I think we're going to see a fundamental shift in how analysts work. The most valuable analysts won't just be those with the best financial knowledge. They'll be the ones who can combine that expertise with sophisticated prompt engineering skills to extract deeper insights from AI tools.
That's quite a transformation from the traditional analyst role.
Indeed, and here's my final thought. Prompt engineering isn't just about getting better answers from AI, it's about developing a new way of thinking about analysis itself. The process of creating sophisticated prompts forces you to be more systematic and thorough in your approach to problems. That's valuable regardless of the tools you're using.
Well, this has been an incredibly detailed look at what's clearly becoming a crucial skill in modern investment analysis.
Thanks everyone for listening, and remember, in today's rapidly evolving financial landscape, the ability to effectively leverage AI through sophisticated prompts isn't just an advantage, it's becoming a necessity. We'll see you next time.